how did this happen, or how did we know that this was happening, or has it been?
The first I heard of it was even an idea was actually Larry's comments at Milken, and I just we did a short story. It got a decent amount of attention, and I started looking around to see whether anyone was actually doing this or whether it was just sort of a thought bubble on stage. Lo and behold, clearly people were thinking about this for a long time, and people have been at it.
So Larry knew something.
I think Larry's view on AI has been pretty consistent for a while. That a lot of money has gone into it. He thinks much more money will go into data centers and AI. He thinks very clearly it's not a bubble. He's been consistent for months. He said as much last week, actually, and as he said, sort of on stage, that basically there's a shortage across all the sort of pieces of the tech stack, and he's investing. Not him personally, but the firm, like Brookfield, like many others, is investing tens of billions and maybe at some point even more across all of the, whether it's public equity, private investments, data centers, debt and equity. And the pricing for the demand, he basically, as he said, is the short supply, endless demand, and the pricing for where those two meet is kind of unclear. And that's kind of what it gets to the story today, is setting a price for compute or computing power.
Enter CME Group and Silicon Data. Kat, you report a lot on the infrastructure, the exchanges, CME Group out in Chicago, Terry Duffy out with a statement about this. How is this going to look at CME Group?
So it's funny, before today's announcement, the various steps, take aside CME, we're starting to gradually build. So Silicon Data created an index that basically gave the pricing that fluctuates, which before they created this index was not there. So once you have the underlying price that is tracking the asset class being compute, then you can create future contracts, and you need an exchange to list those future contracts. Enter CME. So today, with CME entering, there are other startups that are building very, very similar either databases or, like CME, they have exchanges that are starting to create this ecosystem. CME is not going to be the only one that is going to trade futures or other derivatives products on compute power. But because of CME's size, that's why you're seeing the attention and everyone turn to this story today. It's because it signals to the rest of the industry, hey, this is going to be a serious asset class. And not only is it going to be good for the hyperscalers, the AI companies that need to hedge some of the risk and the costs that are associated with building and using AI, but you're also going to have investors, think trading desks, that are going to just add compute as the same as if they would be trading oil. They're going to start adding this to their own trading baskets.
So is that how we liken it? Like, think of it as like you were buying an oil futures contract? Is it the same apples to apples?
At least for the futures contracts and how they're constructed, that's how they're going to be traded. So there's going to be the underlying price, and then when you're buying the futures contract, you're betting on the future price of said asset class that is underlying.
I think one of the things they came across today was that there's a lot of different pricing for computing power at the moment, and setting a sort of benchmark across markets or across geographies, or in this case, across different suppliers or essentially companies renting computer power, is kind of the benefit, as they see it, of having a price to trade.
It's all about transparency.
Basically, futures are typically tied to a commodity, whether it's interest rate futures or oil futures or wheat futures. This is basically a standardized contract for power, computing power in this case, and having a price for it will essentially allow a developer to lock in the price in a 1 month, 1 year time, so that they're not surprised that it has rocketed, or in some cases maybe have collapsed. And for anyone building a data center, right, they want to basically figure out how big of a data center to build, how much will the computing power and the graphics, the chips actually cost. And so this is kind of a key underlying component, also kind of a commodity in that way, of figuring out how much to invest.
Would it provide us as observers of this market, people who want to know if we're overbuilding with transparency into sort of like a window into the future?
I do think that when you have a market like this that is starting, this is a nascent market, when you think of market structure, the more trading that there is, the more price transparency there's going to be. So right now, if there's very little trading in these futures contracts, then it might not be the most, I wouldn't say accurate, but it might not be the best representation overall of what the industry is dealing with. But over time, as more of these companies start using these future contracts to hedge the pricing and the cost and the questions that Silla was talking about when they're building, that ecosystem as it grows is going to become more and more valuable. So it is going to be the signal to not just the AI and tech industry, but overall finance is going to look to, in the same way that when there's an announcement about the war in Iran and everyone looks to what's going on with oil and gas prices, that is going to start to reflect in this marketplace too. But it is new. And so it's not going to be right out of the gate the same liquidity, the same type of prices that you see in these markets that have been around for years.
Traders love to trade, right? Like, but is there demand for it? Is there interest? Or should we just assume that it will be there?
Well, what's interesting is, one of the companies that's part of the announcement today is a firm called DRW. And it's one of the largest trading firms, one of the biggest traders on futures markets in Chicago, based in Chicago. And, to your point, yes, traders like to trade, but it's always one side of the trade. There's another buyer for every seller, right? And so for data centers that are building, or, a chip processing company, they want to figure out the price of computing power. Another firm like a DRW or another trading firm might want to speculate and wager up and down on a moment's notice. So there's a price setting. It just goes back to the basics of markets, right? It's a price setting mechanism in this case for what CME and others are, calling sort of like the benchmark part of the 21st century. The next, our future world is basically relying so much on AI and so much on the underlying computing power.
I do think about, though, the overbuild, right? And if all of a sudden you see, the futures contract, or not as much interest or demand, it will be interesting if it is truly an indicator of maybe an overbuild. What a cool story.